Hey everybody, welcome to the video. Today I want to have a look at Bitcoin, and like previous videos, just go over recent price action, some indicators we can use to help us, and give my opinion on the short, medium and long term of Bitcoin's price action. Now before we get into that though, I do want to say sorry, as I've been gone for just about 10 days now, I think it is, since my last upload. I had a family event, but it went on longer than expected, and every time I tried to get 30 minutes to myself to record a bit of content, I was either didn't have an internet connection, so I couldn't upload. I always like to record my videos and upload them straight away, so that the data is obviously more accurate and more relevant. Or I never seem to have long enough time, or I didn't have my laptop with me. There always just seemed to be something, so very sorry about that, but I'm back now, and I'll try to get to maybe 2 videos out today, and I'll get back to my semi-daily uploading. So yeah, just wanted to apologize for that. Anyway, getting straight into it, we can see we're on the weekly candles, and Bitcoin has had a very interesting last 2 weeks, really. I mean, it's obviously broken above this 30k point, and it's obviously held there somewhat. I mean, we're still right on the edge of it. I mean, at the moment we're only 200 US dollars above it, which isn't really much. Sorry, 300 US dollars above it, but you know, we've stayed above it, we've wicked below and come back up, which is always a promising sign, pardon me. But I also today want to have a look at this sort of 36k point for Bitcoin. So we can see for this cycle it's been actually quite a infamous support and resistance barrier. So we can see we sort of broke up to it here and dipped below and above it, and then finally broke up, and then we came back down to it. It offered support, turned into resistance, then back to support, stayed above it for a long time, dipped back down to here, and of course then we absolutely smashed through it and, you know, left it in the dust. So this 60k price point, 36k price point has been it's been a weird sort of, it always seems to come back to around these levels. And today I want to make a case for maybe Bitcoin coming back up to this 36k point, which I think will happen. I think maybe sooner than most might expect as well. I know a lot of people want to make bullish price prediction for BTC and all this, but I think short term we might actually see a wick up, whereas before I thought we wouldn't have, because I didn't think we'd clear this 30k point properly. I thought we'd hit 30k, stagger around here for a bit, and then drop down, which still might be the case. But today I want to sort of push that to the side and explore the chance that Bitcoin might actually rise above that. So, and I also wanted to use an indicator that I haven't shown before on the channel. Again, I just wanted to sort of bring things along slowly, getting them a bit more complicated. I wanted to use Fibonacci retracement lines today. So if you don't know what they are, that's no problem at all, but we're going to go through them today. So basically, Fibonacci retracement lines, they were made by a Indian, I think, mathematician, or Italian, I'm not sure. Anyway, a famous mathematician who would noticed a lot of recurring numbers in nature, and some people basically decided to apply it to stocks, sort of recurring numbers, percentages sort of thing, and they're sort of famous numbers that are most common throughout nature, and their Fibonacci retracement lines are used to see what level we are, what level a stock or a whatever is currently at in a certain time period. So we can see it's quite colourful. We can ignore this blue and red up here. We're just going to mainly focus from 1 all the way down to 0 here, the 2 greys. And we can see ever since April of 2022, we've gone down past this 36k mark, and we've gone all the way down to this 15k mark, which I've manually input. It hasn't done it automatically or anything. I stretch it down from here to include its lows, and we can see that it's put in its fixed numbers. They're always 0.78, 0.61, 0.5 isn't technically a Fibonacci number, I don't think, but it's often included, and 0.382 and 0.236. So these are the numbers that Fibonacci found most common, or whatever. And we can see that they are actually telling us somewhat. I mean, it's always easy to find a narrative, and it's always easy to fit, data to what you want. But we can see that we sort of, this line here provided resistance, it provided support. It closed around this mark and then dipped below, wicked back up to it a couple of times. I mean, obviously, absolutely crumbled through these sort of supports here, but it did find its feet a bit at the 0.26, came back up, tested the 0.38, came above it, almost tested the 0.5, came back down again to the 0.26 level, tested again, so on, dipped below, tested the 0.23, dropped to the lows of, I might maybe, just to be a little fair, I might bring this up just a tiny bit to include for, well, no, it's fine as it is. But anyway, we sort of hit these lows. This was our support line, hit, retested, broke through, broke down, broke through, broke down, broke through, and basically up to where we are now, we can see that we've sort of tapped this line here, which is 31,500 US dollars, which we're currently sitting at. Oh, sorry, we're currently sitting at 30,000, but this is where the line is, 31,500. We can see we've come close to it a few times, we've gone back down, and we've come close to it. Now, this is obviously a very make it or break it price for Bitcoin. If it struggles to stay above 30k and dips below and is sustained below, we're obviously in trouble. We're going to see another downward turn, which I think we will see before our bull run. But there is a chance that if Bitcoin holds and sort of actually, stays above this line for long enough, whatever macroeconomic crypto factors, Bitcoin will explode up, whether it's a short squeeze, Bitcoin might explode upwards, and the next layer of resistance would be this 36k line, which is the infamous sort of where Bitcoin always seems to come back to. And we can see every time it's sort of hit it, it's sort of rebounded during the bull run, but in the bear run, or the not bull run part of the market where it's sort of just oscillated or done poorly, it's always, hit here, come back to here, and then gone down. It hasn't had an explosive move upwards since. Well, I know that would be, very explosive during the time. You'd be making a 50% whatever. But anyway, so we can see that we're coming up to this line again, and I think we will meet it. I think we'll tap the 36k. I do not think we'll break above it, but I do think short term we're looking at another pump for Bitcoin. I do think we will break through this 30k. I think having spent over 2 weeks now anyway above this 30k, and yeah, we've had wicks below, but it's always climbed back up. I do think we will see an explosive move upwards, these sort of kind of candles, these sort of wicks, up to the 36k. We might move up to 37 for a little while. We might move down to 35, but I think we'll float mainly around this 36k, and then we'll drop back down to maybe levels of 25k, 23k, maybe, before the Bitcoin halving hype starts pulling Bitcoin into the next bull run. We've still got 10 months until the halving is close, 9 months, approximately. Of course, it's not a set in stone time or date until the halving. If, miners suddenly drop off, it'll be another while, but we've got a good 9-8 months at least, probably. So it is interesting to look at. I do think we will break above it, and if we spend time up here, it'll only be a week or two. It might literally just be a wick up, and then we'll sort of fall back down to this sort of 0.618 Fibonacci level, or even the halfway, 0.5. But I do think it's something that will eventually come through. Again, not financial advice. I don't have a crystal ball. Nothing I say is confirmed or could happen or will happen. It's only what could happen, sorry. And often what I think can happen based on indicators and past performance. I mean, we can see if we go to 2018, we also had a dip like this, but it was much, much shorter. But also you could argue the bull run was much, much weaker. We only had one wick up, and therefore a shorter downward time below this sort of, the stage we're sort of in now, where we've had this capitulation, and then we're sort of climbing back up through it, and then we went through another downward, sustained downward, another huge drop, and then with the halving, picking up Bitcoin's price. And you could say we're in that now. We've had these two big bull run wicks, which you could argue could call for a longer downward period, having seen such a price boost. We therefore need a equally long, or ratio wise, we need to hold an equal ratio of volatile movement. We need to spend an equal amount of downtime. So again, I know it's a quick video, but I just wanted to point this out. Fibonacci is often useful. I would use it regularly enough when looking at coins, and feel free to apply it to any coin or token or altcoin you want, including Bitcoin or other pairs. It is very useful. I think I'll have a look at ETH BTC in my next video, and I'll be pulling them out then, I'm sure. So thanks again for watching. Again, sorry for the big delay, and hope you have a great week. Thank you for watching. Bye.